Welcome to Option and Ideas. Today's topic is Credit Policy Profectus NBFC. What is credit policy? A credit policy is a set of terms that lays out how your company will issue credit to its clients and collect unpaid debts. It also specifies which team members in your company have the authority to grant credit or change the terms of credit. There are many reasons a good credit policy protects your business. It standardizes credit qualifications, terms and procedures. It qualifies and disqualifies clients and customers for credit. It defines credit payment terms, including prompt payment discounts, late penalties and interest rates. It sets maximum credit limits. It outlines steps for collecting outstanding debts. It specifies roles of team members in the credit process. How to develop a credit policy. 1. Purpose statement. The top of the credit policy should state that the document is your company credit policy. This purpose statement can be brief. 2 or 3 sentences should do. 2. Statement of scope. Next, state the types of clients and sales your credit policy governs. For example, some credit policies apply only to domestic sales made to businesses of a certain size, whereas others pertain only to international clients. How to develop a credit policy. 3. Credit and payment terms. Perhaps the most important part of your credit policy is the section on credit terms. Be sure to specify the following information. Credit limits. State the credit limit or range you allow. Include information about starting credit limits and when limits are raised. Interest rates. Explain how you determine an interest rate. For example, you may use the prime rate plus a certain percentage. You can charge the same interest rate to everyone or use an interest rate range. The most creditworthy customers generally receive the lowest interest rates because they pose the least risk to your company. Fees. Clearly state any fees for late payments and charges over credit limits, as well as penalties for checks backed by insufficient funds. Repayment terms. Specify how long clients have to repay invoices after they are issued. If applicable, include language about corporate, bank or personal guarantees. 4. Credit application and review. Your credit policy should detail how your company processes credit applications and reviews the credit history of established creditors. Include any factors that could result in a lower credit line. Similarly, note any changes to established customer accounts that could affect credit standing. 5. Sales terms. Your sales team may want some flexibility to make credit terms work for specific customers. Include text that empowers your team members to modify terms to maximize sales while still protecting the company's cash flow. 6. Statement of credit team roles. End your credit policy with a statement of who on your team can execute certain credit-related tasks. This way, both you and your debtors are clear on which employees they can contact or expect to hear from on credit-related matters. Without mutual clarity on these terms, you might find that unauthorized people on your team have extended credit to unqualified clients. Retracting this credit will be challenging, if not impossible. The importance of credit policies for businesses. Operating a company without a credit policy is inherently risky. That's because businesses without formal credit policies may unwittingly extend credit to clients who are unable to pay as promised or have track records of not meeting financial obligations. Without clear rules in place, you may fail to bind clients to timely payments, and fewer payments mean reduced cash flow. Less cash flow results in more challenges in paying your own bills and keeping operations profitable. More pointedly, following standardized credit policies can help you keep clients accountable if you work in an industry known for slow or partial client payments. The mere institution of a credit policy at your company can help your team follow processes that make you more likely to be paid. About Profectus Capital. Profectus Capital offers financing solutions for SMEs operating in manufacturing and service clusters. We have built sectoral expertise, and by relying on it we can customize our term and working capital loan offerings for capacity expansion, modernization and similar needs of SME businesses. We leverage technology for quicker loan processing with minimum documentation and making faster lending decisions. NBFC and MFI funding. NBFCs are crucial growth drivers of the Indian economy and they have regular funding requirements. Profectus Capital offers term loans to NBFCs and NBFC-MFIs for onward lending. Profectus Capital favorably looks at strategic alliances with other NBFCs for partnerships and company lending arrangements. Below are the criteria. 1. Up to 5 rupees CRS of funding for onward lending to RBI-registered NBFCs and NBFC-MF is 2. 3-year vintage with multi-district and multi-state presence. 3. Focus on NBFCs, NBFC-MFIs with good corporate governance, ethical lending practices and innovative products. Documents required: application form and KYCs, 3-year financials and portfolio details, rating and grading report. What type of loans does Profectus Capital provide? Profectus Capital provides secured loans for income-generating purposes to SMEs in manufacturing and service sectors operating in 11 identified industry clusters. The main loan products are enterprise mortgage loan, property-backed business expansion loans, machinery and equipment funding, school funding program, K-12 schools for upgrading facilities, supply chain solutions, anchor-backed dealer financing, bill discounting and vendor financing, merchant cash advances, POS-based daily repayment type business loans. Credit assessment is cash flow-based, thus addressing precise funding requirements of SMEs in identified clusters. Vision of Profectus Capital. Profectus is committed to bring financing solutions to SMEs for supporting their growth. We understand each SME aspires to differentiate itself in this competitive space by being innovative and agile in its approach. Funding must thus be matched with precise requirements for maximum efficiency. We will play the part of a supportive, sustainable and continuous financing partner, thus realizing our vision of being partner in progress to small and medium businesses. Mission of Profectus Capital. We are committed to help SMEs secure credit and to boost their growth prospects. Profectus follows customer-centric policies, transparent processes and relies on technology to arrive at workable financial solutions. Our workflows are designed to be flexible such that every unique operating aspect of SMEs will be factored in decision-making, at the same time safeguarding interests of our stakeholders. Thank you for watching.